Hi, everyone. Chris Johnson from Money Morning, and today we're taking a dive into Tesla. I once had a rule that I wouldn't short Tesla simply because you can't bet against Elon Musk. That rule has changed. I'm going to walk you through the fundamentals, the price, as well as Wall Street and how their recommendations have been dropping on the stock. All of that adds up to lower prices and, as I said, has me changing my rule that bars me from shorting Tesla stock. I'm going to take 5 to 10 minutes. We're going to walk through it. You'll walk away with some price targets on Tesla and a warning on where it's heading. Stick with me and let's jump in right now. All right, I've already told you about my long-standing rule. I simply told myself long ago that I should not short Tesla. Why? It's hard to bet against Elon Musk. I mean, the guy is truly a genius. He's an innovator in a number of areas of the market, but things have changed for Tesla here, and it's not all Elon Musk's fault. Certainly, we have seen some headlines that have kind of dragged his image down a little bit. I'm setting that aside today and just looking at the fundamentals and the price chart of the company, and it gives a stark warning right now if you're a bull on Tesla. Let's take a look at some of the fundamental picture on the stock right now, and these are the notables. This is just scratching the surface. Obviously, you can get a lot of information on the stock. Try to avoid the headlines because they're whipping things around right now and focus on what is driving the stock price. So if you look into what's happened with the EV giant here over the last year, they've run into a sizable slowdown in a number of areas. Automakers like GM and Ford were coming into the space, and they were coming in big. We've seen the competition expand very quickly, and that's put some pressure on Tesla, right? But when you look at it, the market is also slowing down as well. We're seeing demand slow down for EVs in general. I already mentioned GM and Ford kind of backing away from the market, actually reintroducing the Volt, going back to the hybrid market, which is taking things back to where the consumers are. It's funny. I've got a neighbor that's got a Ford Lightning truck, and he bought it because it was the brand new shiny pickup truck that was an EV. That is a great symbol of what happened to Tesla years ago. They were the first to market. They had a cool product, and everybody wanted it. Even Ford has backed away from that very hot product very quickly. So that's one of the pressures out there. And I've already put the other thing very simply. They are not the only giant in the market right now. They don't own the market. When Tesla was introduced, EV was the newest thing out there, but it also had some tailwinds going for it. One of them was the huge tax credits, which we've seen cut back here. You've got international growth, which Tesla dominated, but now that's flipped and you've got a lot of competition. So it's not only the competition in the market, but it is the tightening market for EVs. All of that is showing up in the struggle in the numbers for Tesla. When you look at the earnings per share over the last 2 quarters, the company actually missed expectations. So Wall Street had an expectation they would earn X, and they came in with Y, which was lower. The last time that happened, 2019, July 2019, 2 consecutive quarters where the company missed. It came out of that little nosedive that it was in, but it was because, again, we saw that market that was expanding so quickly. So that was one of the tailwinds. Revenue at that point, back in 2019, was growing 53%, then 80% on a year-over-year basis. Right now, over the last 2 quarters, you've seen 8.8% year-over-year revenue growth 2 quarters ago, and then just a little bit over 3% last quarter. So the last 5 quarters have seen revenue that has just been going flat, and you're likely to see a little bit of a decline now that we're seeing demand come down. How's that played out for Tesla shares? And stick with me. We're going to get to the price chart in just a second along with those targets. But the fundamental slowdown has resulted in institutional ownership actually dropping. In 2022, we saw about 44% of the shares held by institutions. That's dropped down to 41%. Short interest, so the number of short traders out there, or people shorting the stock, has actually been rising. This is going against that rule I already pointed out. You don't short Tesla. Well, guess what? The rest of the market is starting to do that because of that price chart we'll hit in a second. We saw short interest increase 8%. Now, it's still very low according to what I look at, I usually like to see a short interest ratio above 6 before I look at it as too much pessimism out there. In this case, you're down around 1 on the short interest ratio, and that's outstanding for Tesla. But the fact that it's going up just tells us that the crowd is growing of people that are betting against the stock. That means fewer buyers and more sellers. And then Wall Street analysts, they're backing away from the stock. This has been Tesla's friend for a long time. We've seen analysts come out and defend the stock and where it's going. Look at what has happened here. And this is just the history of the Wall Street analyst recommendations. We only saw a small period of time, 2022 to 23 in the last 3 years, where they actually favored the stock as a buy. And you can see that was after the stock peaked and was coming over. Now we're seeing actual downgrades of the stock, and I expect to see more, especially if we see any sign of weakness in the next quarter results. The other thing that you want to look at here are the price targets from Wall Street, because this matters. If we see price targets get lowered, usually drives sellers into the market. And you'll notice right now, we're at about $205 right now on the average target price from Wall Street. You're at 170, 175. We've been bouncing around. I'm going to show you the chart that says we can expect maybe 100 as a target. But right now, your high is at 320. I'm afraid that we're going to see some analysts come in and start to downgrade their price targets as well. And as I said, that is just going to push more sellers into the market, the Main Street investors. Let's look at that chart right now, because here is where the rubber meets the road, as they say. Kind of a pun intended there, by the way. So what you're looking at is a daily chart of Tesla. This is the daily price activity. There are a couple trend lines, moving averages here I want you to focus on. This is the 50-day, the green one there. Whenever the 50-day moving average is trending lower, basically says there's a 2 to 3 chance a stock that it represents is going to trade lower as long as that trend is down. You've heard the saying, the trend is your friend. Well, right now, the trend is not friendly for Tesla. That shows me that we're going to see some resistance around that round number of $200. If the stock were to rally that high, I think that's going to be a really hard feat right now for Tesla, because we are seeing a lot of pessimism come in towards the stock. The other line up here is that 200-day moving average. That's the longer look at the moving averages here. And you notice this. Anybody who's a chart watcher is going to see that 50-day crossing below the 200-day. That's what we call a death cross. It sounds ominous because it usually is. Usually forecasts that a stock over the next 6 to 12 months is going to see declining prices lead even lower. So momentum is very negative on Tesla. The 20-day moving average and all of these, I don't think, and that's the red line here, they're not going to come into play too much. That 175 level is what you watch as resistance. Now, I want to focus out, and I don't do this too often, but look at the long term on Tesla. This is the monthly chart. So we've gone from a daily to a monthly here, a longer look. And this is the line I want you to focus on. That red one is a 20-month moving average. That is the line of demarcation between a bull and bear market. You notice when we slipped back below just a couple of months ago, you saw an acceleration in the selling. We are right now in a long-term bear market trend for Tesla stock, and that does not bode well for anybody. GE, name the stock. Whenever we break below that 20-month moving average, it is usually a sign that the momentum is going to take share prices even lower. So I look at that, and that is going to be ultimate resistance around the $220 level. If we saw some miraculous rally, that's where I would be shorting the stock pretty aggressively. $200 round number, you can see how this is held in here as support and resistance. Right now, the next one is going to be $150. That's going to hold as a little bit of support for the stock just because of the psychological backing that goes behind these round numbers. In other words, investors like to act when they see 50s or 200 or 100 price levels taken out. Doesn't matter again on the stock. And then after that, and here's where my price target comes in, within the next 6 to 12 months, and assuming that we're going to see some weakness in the market as well, I think you could actually see us hit those 2023, 2022 lows right at $100. At that point, I think Wall Street would come in and really bang on the drum and say, you have to buy this stock. Do not buy at your own risk. In that case, I would probably start to agree this is one of those opportunities where the market will probably start to favor Tesla again. But until then, the trend very unfriendly for the EV giant. So let's kind of add everything up right now as it stands. I've given you a lot to digest. Tesla, first of all, the fundamentals have been slowing down, and that is because a market that is tightening up on them and more competition in the market. As a result, we've seen institutional ownership start to drop just a little bit, and we're seeing Wall Street back away from the stock. And that is a sign that that trend is going to gain more momentum, more people telling you to sell the stock and the public opinion going in that direction. And as a result, we have seen the price break down. $200 was the last level I was watching. Now $175. When we break back below that, or that 170 level, I believe that you're going to see $150 rather quickly. And it could come right around the next month or so as earnings approach. But after that, especially if we see some disappointing numbers in that earnings report, I think you have to look at $100 as a reasonable target. That's another 33% from that $150. Downside is pretty dramatic for Tesla right now. Again, breaking my rule on shorting Tesla stock and going against Elon Musk for the time being. With that, I'll close it up. Hope you got some great information. Remember to like and actually subscribe to the channel. Get more information just like that. We're covering a growing number of stocks. I wish you the best trading success and hope you have a great day.